I'm Corbett Wall with DV Auction, here with your feeder flash for Thursday, June the 27th. I want you guys to go to nationalbeefwire.com and sign up there for the newsletter that you'll get every day. It's the best way to get this report dropped in your inbox every morning, and it's got a lot of markets on there and a lot of news on there. But that's the best place. A lot of you guys are having trouble with the BMC app on your phone. That's probably going to continue because that's not being supported adequately. But go to National Beef Wire and check that out and sign up for that newsletter, and it's probably your best way, or it's definitely your best way to get this report, and I think you guys will like it. Also, not going to have a report for Friday here. I'm traveling in Ottawa, Kansas right now, headed into Missouri. I can't even tell you guys what I'm going to do there. It was all about not having any leverage in the trade, and kind of a bad deal I'm going to have to do. But on my way back to Texas, going to be able to stop at in the 4-state area and go to Primetime Livestock Videos big special on Tuesday next week. I'll be there. We'll have a report from there, and any of you guys that are in the area that want to come, they're having a lunch there at 11:30 on Tuesday, then having the big special video at 1 o'clock, and hope to see a lot of you guys there. Now let's talk about this report. Your feeder cattle futures were limit up. That was great. Everybody excited. Finally, we were thinking that this deal was going to turn around at some point. But why? Well, there's several reasons that it could be blamed upon. Part of it might have been, like what I talked about on the last video, that China-Canada rub there, where China has halted all imports of Canadian meat, pork, beef, everything. It has a lot more to do with politics than it does with the product, but saying that it included some additives that had been banned, and supposedly some forged signatures on documents, and I don't have a stance on that because I don't have any specifics or any proof on anything. But the deal is, China's not taking any more Canada meat. Now, is that good or bad? Well, you would think, it depends on how you look at it. What would you think? You're going to think, well, Canada's going to have more meat products that they're going to need to get rid of, so that means they're going to move more of them into the U.S. We already buy a ton of meat products from Canada. They're one of our best trading customers. They buy a ton from us. We're just like brothers and sisters. We just to trade back and forth all the time. We've got a very healthy trading relationship. So I'm not sure that we're going to end up taking a whole lot more just because China's not taking any. What I think means more is that that's one fewer place that China's going to be able to get meat to fill their protein void from this African swine fever that they've got. And if they're not getting it from Canada, they're already getting a slug of it from Australia. South Korea now has their own breakout of African swine fever. They're going to start running out of places to get it. It might make them come to their milk a little bit quicker and start buying more from the U.S. And that could be a positive. That could have been one of the things. Another report that recently come out that USDA has okayed corn silage for government subsidized crop insurance as a cover crop. That's significant because there's a lot of places that they couldn't get planted, that washed out. It's going to be too late for grain corn there, and they're going to have to put something in there to keep it from eroding or do something with it. If they are going to let them put silage type corn in there, that makes a lot of feed, guys. And so, you know, there's going to be a lot more feed there. Silage is a great feed for growing cattle, and if they're going to have a lot of grain in it too, you can also use that to fatten cattle. I know whenever I spent time back east in Pennsylvania Dutch area, Lancaster County, they would take a 500-pound steer calf and feed him silage with a lot of grain in it for over a year. And you talk about fat and good. I mean, they were really, really good cattle. But that could be another thing. Probably the one that's the most is the technical indicators were so strong for a big turnaround on this on the cattle futures. You know, I don't study that stuff, the technicals. I did take some of that in college, and I vaguely remember some of it. I'm a fundamental guy. That's where I'm at. I understand how they search those gaps, those head and shoulders, those crosses, the hangmans, all the different things that they have in looking at those charts. But all of them look at it. All those funds look at it. All those speculative traders, they look at it, and if they're all looking at the same signals and it's all saying that it's time for cattle to turn around, guess what? It's time for cattle to turn around. But let's look at the board on Wednesday. June live cattle futures up $1.25 at 109. August up $2.12 at 105.37. August feeder cattle up the limit, bing, 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 $4.50 at 135.82. However, your nearby August was the only contract that was all the way up the limit. Your other nearbys were close, and then when you get way out front there, you got where they were just up, $3 and something. But still, very, very active, very, very strong signal for your feeder cattle futures market. September feeder cattle futures up 447, so just like 3 cents of being up the limit, but it would have been better if it had been locked up the limit. But 136.35 to end trading there on your September contracts. Your hogs were down some. Nearby's down about 85 cents, and you went way out front. They were steady to a little stronger, but we were thinking we were getting support from the hogs, and then on the day when your feeder cattle are up the limit, your hogs actually are down some. Corn and beans were both down, 3 or 4 cents on the corn, 8 or 9 cents on your beans. So that was supportive also, but I think most of it was those technical indicators that the bulk of your long traders were looking at, and they're all showing the same thing. Your fat cattle trade has yet to develop. You can bet whenever things are good on the board and it's looking like we might be able to hold ground or gain market after we've been losing a lot of ground. You know it's going to be quiet. I mean, and those packers were quiet as church mice out there. Just some kind of token bids out there. Really, not a whole lot going on at all. Had about 1,000 cattle trading in Iowa, which is nothing for them because they trade a few cattle all the time, but few live sales stretched from 109 to 113.50. Not sure exactly when those were going to deliver. That 109 would have sure been 4th of July week or after. Maybe the 113.50 was nearby, but who knows. But not enough of them to really make a difference. Dress sales at $180. There was $180 out there from regionals in the Northern Plains. You could have got that if you'd have wanted it. That would have been steady with last week. Nebraska only about 400 head at $180. Nothing at all in Texas. Nothing in Kansas. And of course, confidentiality keeps us from being able to see anything on the short played Colorado area there. But it's going to be hard to have any basis jumpers out there when we've got live cattle June at 109, and we think that the industry was trying to set itself up for a $108 market this week. Packers would have loved that. They actually bought some cattle late last week at $108, but no basis jumping for that. And it's going to be hard to trade. I know I'm not going to have a visit with you guys for Friday. I really doubt that there's going to be significant trade on Thursday. It'll probably be Friday. So then we'll catch up with that on our weekly summary the next time I talk to you. But some packers are claiming, and it's all psychological, guys, but I heard a lot of guys saying that, well, one major packer in particular was saying that they claim that they're full all the way through July, and anything that they would care to look at or even bid on would be for August. Yeah, right. Okay, well, that's another game that they play whenever they're trying to keep a down market going, and we have reason to hold the market or give some support to it. But box beef cutout values steady to weak kind of this week. I haven't been seeing a lot of change in there, just a little bit down on both choice and select cuts. Your slaughter is keeping up really well. Your slaughter so far this week through Wednesday, 363,000. That's 2,000 more than the same time last week and 13,000 more than the same time a year ago. Another thing with your packers, they're buying for a short week next week, so they're probably not going to get real aggressive, even though they'd like to get some cattle bought and your sellers are not going to be excited about taking lower money. You know, they might see a few guys that would consider steady money, but when they're buying for a short week with 4th of July kind of in the middle of the week this week, and probably not going to have big days around that, but could have a big Saturday next weekend, but we'll see how that works out. Let's talk about some of your feeder cattle markets. Your two big stick-out sale barns that were on Wednesday was OKC West, which they always are. They're the biggest. They had a lot of yearlings. They had that big yearling special last week with 10,000 head and a lot of their featured consignments. They came back this week with 6,500 yearlings and a good market there on probably not their most notable consignments, but still it was sure higher. Bassett, Nebraska had a big sale, and they had their special. They had a lot of fall-born calves on there, but also had some green yearlings too. But both those markets were higher, and of course we haven't seen one of those was Northern Plains or Upper Midwest featured markets like Bassett for a while with a big slug of cattle. But both of those are going to lift your index levels. Your real-time index on Cattle Market Central late in the day on Wednesday at 133.15. Up $1.62 from Tuesday's close there. But look at OKC West and El Reno, Oklahoma. 8,000 total head for the 2-day sale, about 1,500 calves, around 6,500 yearling feeders for the Wednesday sale. Talked to John Cooper on there, and he said, oh my God, it's been so long since we've had an up market, let alone limit up on a Wednesday. They seem like they always get the dirty end of the stick being on a Wednesday. Just time and time again, it was always kind of a downer when we had a volatile market, but finally they got a big up on the board same day. They had a lot of yearlings there. Feeder steers $1 to $3 higher than that steady market they had last week on that big 10,000 head special. Feeder heifers $2 to $4 higher. The calves are just not well tested in the middle parts of the country right now. You know, they're either still out there on mama or they're grazing on some of these lush pastures that we have all over the country, and just not many calves moving, and why would there be? But let's look at that OKC West in El Reno, Oklahoma report on Cattle Market Central there. This is all the cattle right there, and look at some of these featured weights on their yearling there on Wednesday. 859 head of 7-weight steers, average 752 at 133.59. That looked about steady compared to last week on your weighted average on Cattle Market Central. 1,509 head of 8-weight steers in El Reno, averaged 856 at 127.93. That looked about steady to a buck higher. And 1,232 head of 9-weight steers, averaged 9 1/4 at 124.22. That was more like $4 higher. But look at some heifers. 817 head of 7-weight heifers, averaged 756 at 123.31. Sure, $2 higher on the weighted average. 885 head of 820-pound steers, averaged, or those are heifers, excuse me, 820-pound heifers in the 8-weight heifer group, and they averaged 118.60, $2 to $3 higher on the weighted average from the last week's sale. Now let's talk about, that was a commodity market. That is the market in the bulk of your country there, especially in the southern plains, on a commodity market, moving a lot of those cattle, a lot of Okie cattle. Some of those cattle would have been crossbreds, some of them good enough to go north, especially this time of year when it really doesn't matter. But that is your main just thumbnail market report right there. Now we're going to talk about Bassett, Nebraska, way up there on Highway 20 in the sand hills there. This is a northern plains premium market, guys. Farmer feeder type market. A lot of fancy fall-born calves in there. 5,200 head there. Let's look at the Cattle Market Central market report from there. They haven't had a sale like this for a while, so you really can't compare, but good demand on all the weights that were represented there. But look at these calves. 739 head of 5-weight steer calves, average 555 and 178.84. It'd be hard pressed to get that on one single lot of fancy 5-weight steer calves, let alone over 700 head averaging 555 on all the steers that were there. 954 head of 6-weight steers calves there, average 646 at 167.87. Wow. 578 head of 7 weight. There would be maybe a few lighter weight yearlings in there, but mostly bigger fall-born calves. Weighed 739 on the average at 155.70. Heifers, 814 head of 5 weight heifers in Bassett, average 557 at 157.31. That's more like steers anywhere else, guys. 858 head of 6 weight heifers, average 641 at 149.77. Look at this individual quote I'm going to give you from Bassett, Nebraska. I want to say hi, Shane Kakzor and all the good guys that hang around there that I spent time with back earlier this spring and really had a great time with those guys. Look at this individual quote from Bassett, Nebraska. 80 head, 627 pound steers in Bassett brings 178. That's your feeder flash for Thursday.